Time now for Futures in Focus. Oil on track for its third straight weekly gain. Joining us from the CME is Scott Shellady, TJM Europe Managing Director. Scott, we have crude here in the US, WTI around 72, Brent around 82. How long does this last?
I don't think it's going to be forever. I mean, just like the housing market when it took off and interest rates, I think it's going to be lower longer. So I think it's going to be a slow rally, but it's not going to get out of hand. And I think that's due to the fact that we still have great production here in the States. And ultimately, I do believe that the global, say, tariffs and or the sanctions with Iran, they'll ease as well. I think this is largely due to the fact that we've got the Iranian sanctions starting to bite. We've got some oil analysts that say we're trying to replace 1.5 to 2 million barrels a day. So we've got a little bit of a scare in the market there. So if you're short, you got to get out. But I just don't think it's going to catch on fire per se. Well,
just as I speak, we have WTI now crossing $73 a barrel. How long does the spread between WTI and Brent remain at close to $10?
I think that's due to the Iran sanctions. So as long as those sanctions are in place, that's going to give a little bit of a boost there. And we still have decent production here. I mean, about a week and a half ago, we got some research that said in North Dakota, the Bakken here in the States, was producing 1.27 million barrels a day this summer, which was equivalent to Venezuela. So as long as you've got those two forces, sanctions on one hand and production on the other, that's going to keep that spread wide.
Talk to me about the dollar. We have the dollar index now above 95 again. So finishing out the month on a strong note. Does that continue into October, Scott?
Yeah, I mean, if we continue to get the good numbers coming out good, what I mean by that is growth. The growth numbers are showing good numbers, and the bad numbers don't come out that bad. What I mean by that is inflation. Well, the inflation numbers are coming in rather benign. When you have the good coming in good and the bad not so bad, that's going to portend a stronger dollar. And I think we have to be careful about the Fed here a little bit. And they don't get out over their skis, but they're liking the U.S. economy because it's strong, but we still don't have a ton of inflation. And I think that all that adds up to the dollar slowly but surely, again, slower for longer, that slowly marches higher.
All right, we have the employment report next Friday again already, and the 10-year yield is back down to 3.04%. Meantime, the 2-year is holding up at 2.81. What happens next week to yield, Scott?
Well, we have to... ultimately, I think they go back out, or I think bonds will sell off at some point, and we'll see those yields rally a little bit. But what we had happen over the last few days is a lot of speculative money, maybe not well-capitalized speculative money, was short the bond market looking for a rate hike, which they got. So what they thought was going to happen did happen. But we had so many people short that market. Sometimes when you get the outcome you want, you need somebody to come in and let you out of your position, right? Well, nobody came in to sell bonds on the back of that number. And so all of those weak shorts cannibalize themselves on the way out, buying their bonds back, sending bonds higher, sending yields lower. Once we get through all that mess, we'll slowly but surely start to see those yields ratchet up again as that economy comes in stronger with no inflation.